Lead Financial Officer of the Government and Debt and Risk Management team at the World Bank Treasury. Let me welcome everyone to this webinar on syndications for the issuance of local bond tradable at international clearing securities depositories. I'm glad that we have the opportunity to hear the experiences of Panama and Chile that are using this as a vehicle to attract foreign investors for their domestic bonds, among other things. As you can see in the agenda, the idea is that we would start with the case of Panama, which is going to be presented by Ana Lagrota. Ana is the Deputy Director of the Debt Management Office of Panama, and she'll be together with Etzel Payares. Etzel is the head of the Middle Office, and they both were involved in the transaction that was concluded earlier this year. Next, we'll move to the case of Chile. Chile has issued this type of securities at least 3 or 4 times, if I'm correct, since 2018. His case is going to be presented by Patricio Sepúlveda, who is the head of the Chilean Debt Management Office. After we have these 2 cases, we'll have a panel, and Javier Hernandez, who is associate from Morgan Stanley, and Leandro Secuño, who is a colleague from the World Bank Treasury, senior financial office of the same team where I work. They will join the discussion. Javier, as part of the Morgan Stanley team, has worked in several transactions of this type. Leandro also was the head of the front office of the Brazilian National Treasury, and it's very familiar also with this subject matter. Before I pass on to Ana, let me just say that this topic of attracting foreign investors to local bonds is an issue of great interest to debt managers. There is always these limitations that emerging markets face in terms of how much debt can they issue in local currency or local bonds. Let me clarify by now that Panama's currency is the US dollar, but in the case of Panama, there are 2 markets: the external market, the euro bonds that they issue, but also a local market. So it's interesting to see that there are very different approaches to how attract these foreign investors to the local markets. And they are not only different because of the size of the markets, but also because of the way different debt management offices value the pros and the cons of this international clearing securities depository. The subject matter, I see this webinar today as really the beginning of a discussion. I think there are, as you will see, there are many issues, many points to talk about. So we may hopefully we use this up more as the beginning of a discussion that could continue next year. So with that, let me pass the floor on to Ana and Etzel to hear the case of Panama. The other point, I think everyone can see also the CVs in case you want to know a little bit more about the speakers of the presentation. But Ana, the floor is yours.
Hi everyone, good morning and thank you for joining. My name is Ana Lagrota, Deputy Director of Public Financing. With me we have Etzel Payares. She's the head of the front office. There was a small typo in the invitation. I don't know if you all can access our presentation. But I'm going to start with a brief introduction of what was the objective of our transaction, kind of the rationale behind it.
Anna,
Yeah.
if we don't see your presentation, would you like me to display from my end? You need to share your screen.
Yeah, let me know.
Let me pull your file up. Okay?
Okay.
Okay, 1 second. You can scroll down. You have access to it until you get to your presentation.
Okay, let me see.
I can do it for you. Okay. I can display it. Let me know which slide.
Okay, you can go to the second slide.
Go ahead, Anna.
Are you able to do it? Because I can't see it from my end.
We are viewing the presentation now. You can continue, Anna.
Yeah, I can see it from here.
Okay. So as I was saying before, we kind of want to present to you the objective and the rationale for doing this transaction. Our local market is very small, so for the share of our total debt, 20% is approximately the local market, and the longest instrument that we had issued is due in 2024. So we saw the need to extend our local curve and to bring more depth and liquidity to the market. But Panama's local market is very young and is still in development. So we needed to find a way to bring more investors to our local market, to the transaction, in order to raise a substantial amount so that we could establish a new benchmark point. Usually when we do our local auctions, we only have around 200 million, approximately a maximum amount at a time. So for us, this transaction was the first, and it involved bringing a larger pool of investors, doing a roadshow to explain the rationale behind it and why we wanted to do this when it's so easy for Panama to get funds in the global markets. So with that in mind, I will pass it on to Etzel, who will be given a few of the characteristics of the transaction and what was the issuance, and then we can go more in detail about everything.
Hi, my name is Etzel. I'm head of local market. About the transaction and the instrument, on April 10, the Republic of Panama launched a 1 billion instrument with a local law under the 144A regulation and with local law. The particularity of this instrument is that we already have our instrument on the iLink platform, and it also is euro clearable. It is listed on our local clearinghouse house, which name is Latin Clear, and it was a very hard work. However, we successfully had an initial price of T plus 150 basis point, and at the end we had a spread of treasury of T plus 140 basis point. The maturity of this note, because we call it is important to say that all our instruments that are under 7 years, we call them notes. And for this instrument, the term it is treasury notes. Over 7 years is treasury bonds. Well, going back to treasury notes, the coupon by the end was 3.70, and the yield of maturity 3 plus 7.75. It is important to say that 75 were for the international offering and 25 for the local. We have 50% of the offer over we always expect in the local market, and it was a very good and successful for us. And as Anna told you, our large instrument, it was the 24, and the circumstances where these instruments were launched were very, very different from this one. And what we see with these notes, treasury notes, is that the market were open into offer for long-term instrument, and that was very good for us, because always when we were doing the meeting about the new instrument, they were always they push us to put short term, and that was good for us. The other thing about the transaction is that we have a very good investor and diversity types, and that was good for us to see that we could allocate to asset management with the 67% pension funds, insurers with the 16%, and banks with the 14%. Also, to see the 48 comes from the U.S. and 25 from Latin America. Also from other places, 25. Even though the local law for this instrument maybe wearing the most deeper, because as Anna told you, we are very small market, and we also are very new in this.
So just to add there, 75% of the issuance was allocated to international investors. So we raised $1 billion, and $750 million was allocated to international investors, and $250 million were allocated to local investors. Aside from that, we carried out for the first time a different type of auction for the local market. Usually we have an American style auction during our local issuances, and we used the Dutch auction during this, which allowed us to tighten the price substantially. In that sense, the local note was priced around 40 basis points above the international curve. That was the premium investors were demanding, just for giving them a new instrument, which they didn't know the law at the time. And hopefully, if you go to slide number 3, secondary market performance, yeah, you can see in the graph that initially as I said, we priced it 140 basis points above Treasury, which is 40 basis points above our global or our international curve. And as of November, we have been able to compress that price to approximately 112 basis points above Treasury. It even reached the lowest spread was reached in September, I think. Yeah, in September, reaching only 1 basis point above our reference global bond. So for that, I think it's important for us that historically we have usually priced of all of our local instruments way above the global bonds. And I think by doing more frequent issuances of this type in the local market, we will be able at some point to kind of bring both curves at a very low spread between each other, or even possibly the same spread. So for the next slide.
Okay, we're gonna talk about irregular custody. Since 2014, we have been trying to improve our iLink platform, and with this instrument, we see how it's getting better or looking for best or better results. Since this instrument appears, we are now having 900 from the instrument trading in Euroclear, and this represents an average of 78%. So for us, compared with the others local instrument, this instrument put us on the look of the not even the people who buy them on US, but also in Europe. And this is what we wanted to have, a very diversity instrument. And it is important to say that the bank give us a lot of support, and the suggestions for this transaction were very good, because they try to show us how can we be able in different markets be able to bring the investor in a security way. And that's why we think it was a very successful instrument. We want to quote that in Panama, the local instruments are materialized. That's why you see in the require of local regulation slide, you see our global and macro titulo. And when we were talking about this with the banks and how the investors were react about this, we were like very care, but everything were good and they accepted. Even we still have a macro titulo. The accounts are in an accounts annotation. So maybe that's why it wasn't that hard as we believe.
So for the next slide, for the pros and cons, as I said in the beginning, doing this instrument was a new experience for us, and the overall objective was to increase the liquidity and the depth of the local market. One of the things that usually rating agencies mention to us is that Panama doesn't have a central bank and therefore doesn't have a lender of last resort. So in this case, even though Panama is a dollarized economy and has been functioning well for 100 years without a central bank, they still mention this frequently. And by developing our local market, we could have an alternative funding source for whenever international markets close to us, or there is something happening and it's easier and faster for us to get funds from our local market. In the end, our goal is to keep extending our local curve. For us in the global market, we are able to issue 40-year bonds without a problem. I think the next step for us would be to issue a 10-year euro clearable bond just to keep extending this curve and keep doing this exercise. So one of the other pros that we found is that we were able to diversify our investor base from our local usual investors. As I said, the pricing mechanism also allowed us to reduce the spread, and we reached two times oversubscription, which I think is very successful given that it was the first euro clearable treasury note that we issued. And one of the cons, I think, in that our hope is to be able to eliminate this as a con over time, is the larger financial costs over our normal global bond issuances. I think if we see the secondary market performance, I think this is possible to do over time as we continue issuing this type of bonds. And because it was a new transaction and we were all kind of figuring out what our local law regulations were demanding from us, and also taking into consideration what international investors wanted, this type of transaction has higher legal and operational costs. But I think over time, as we do this, we are going to be able to smooth out the whole process and hopefully do it as fast as we do it in the global market, and keep bringing international investors to our market. So with that, we conclude our slides, and I don't know if anyone has any questions that you'd want us to answer.
Thank you very much, Anna. We will have the Q&A at the end. With that, I would like to ask all participants, please use the chat function. You can submit your questions during the presentation. We will address at the end of the presentation. Antonio, floor is yours.
Yep. No, I think this is a very interesting experience as Anna and Etzel were presenting, because for the issue for Panama is that the local market is been very difficult to issue. Most of the funding needs have been raised in the euro bond. So this was a kind of a bridge to bring in foreign investors. These transactions allow to bring in foreign investors and buying a bond that is issued under Panama law. Let's hear now from Patricio from Chile, with a market that is very different from the Panamanian. It's much larger, and where also we have the issue of the local currency. So, Patricio, the floor is yours.
Yes, hello Antonio, hello everybody. This is Patricio Segura. I'm here with the team, also with Victor Gonzalez and Joaquin Guajardo. Let me 1 second to find the presentation. 1 second.
Yeah, let's see if Patricio can share the presentation from his end. Otherwise, we will have to do the same as we did with Panama.
Noted, noted. Patricio, please share your screen so we will see your presentation when you have it ready. Thank you. We're looking at it now. Thanks.
Okay, good. So first, I mentioned for us it's a pleasure for us to present the Chilean experience. It was an experiment that we began in 2017. We realized at least 4 transactions over time. Last one was in June or May, sorry, of this year. So first, in the following slide, I will give you a brief overview of the debt policy goals and the structure, only to understand why we implement this policy in order to realize this kind of transaction. So regarding the domestic market or domestic currency bonds, basically it's designed to develop and lengthen the yield curve, both in nominal and also in inflation-linked bonds. But also another very important goal is to deepening or to deep the liquidity by fostering greater foreign participation. So together with this, recent issuance have strengthened new benchmarks and have created longer tenors, extending the debt maturity profile in line with international standard. The longer bond that we have in nominal is the 2050, and also inflation-linked bond is 2050, and in the foreign currency bonds also we have a longer bond in 2050. In the external markets, this is a very traditional goal in order to establish benchmark to facilitate the access of the Chilean corporates to the international capital markets. For us, it's very important to maintain important benchmarks in US, but also in Euro. So as you can see on the figure to the right, the government debt is mainly denominated in local currency. It represents about 80% of the debt. And you can see that in 2002, the currency mix was the opposite, with 94% in foreign currency. So over time, we have migrated to the mix of the current levels. Also in 2014, we also incorporated as a strategic decision a new curve, the Euro curve. And also over time, we have issued several Euro bonds. Currently, they represent almost 50% of our foreign currency bonds. So we also implement different initiatives that I will explain more in the following slide to integrate our domestic custody and clearing system with Euroclear, basically to attract more foreign investors to our local fixed income markets, with again to increase the market liquidity and the depth of our market. Lastly, this year also we include an additional goal, additional of the previous, basically is to promote the development of a green asset class, social or green bonds that attract foreign investment in support of the country's sustainable infrastructure needs, while diversifying our investor base. In the following slide, sorry. Here you can see the different measures that we implement in order to increase the participation of the foreign investor, but also the liquidity. But the diagnostic we began this analysis at least since 2010, and the diagnosis was very simple and dramatic. So the Chilean fixed income markets had a very important lack of liquidity. So therefore, we began an important process of discussion with the investor, with the brokers, with the regulators, etc., to understand the situation, and finally we established an important strategy in order to improve over time the liquidity. So in this slide you can see the different measures. The first one was to have less auctions per bonds in order to have higher amounts. Instead, the previous method that we had, it was the multiple auctions of smaller amounts. We increased the contact with the investor in order to update about the debt management operation, the plan that we had, and also regarding the Chilean economy. We realized an important change related to settlement, because you know that in the international standard, the settlement that we have in Chile was T+0, so we have to change this in order to have T+2 and to be more similar to the international standard. We also began an important discussion with the JP Morgan research team in order to include our bonds into the GBI Emerging Market Bond Index. In 2016 also we performed, I think, the most important operation in the local Chilean fixed income market related to an LM that we perform in order to repurchase. I will explain more this in more detail in the following slide, but we realized that we have to have more benchmark with more important size in order to be more attractive for the local player, but also for the international players. In 2014, in 2016, we sent to the Congress an important change to one article of the income tax law in Chile in order to make more simple the mechanism of the retention of the withholding tax of the 4% to the interest. I think that it was also an important moment or an important measure in order to be more available for the foreign investor our bonds. So moving to the following slide, here you can see to the right, so the material profile that we had at the beginning of 2016. So you can see on the bottom right the nominal curve, and in the bottom, in the lower right, the inflation link curve, and you can see that the exchange was very important in order to minimize the size of the benchmark that we consider illiquid, and we increase the size of the bond that we consider more liquid. We selected a very particular tenor, basically the 5, at that time, 5, 10, 20 year and 30 years. And over time, we continue to realize this liquidity management in order to concentrate the key trading in this benchmark. Below, you can see the inflation link curve. You can see that in that curve, it was the most important change regarding material profile. We concentrate at that time bonds with size about 3.5 billion to 7 billion. And over time, we will see that it increased to the size of about 4 to 7 billion, not only in the UF or the inflation link curve, but also in the nominal curve. So you can see that we include here in the slide that the participation of the foreign investor was only 3.4%, and we will see that over time they increased for about 16% that we have currently. So going to the experience of the first issuance in 2017, So it was in January. It was an amount of about 1.5 billion of US dollars. This is about 1 trillion of Chilean pesos. And so the way that we did this transaction is to allow international investor hold a direct interest in the bond through Euroclear, as we mentioned previously. And Euroclear is a DCV participant. DCV is the Depósito Central de Valores. It's like the DTC, but in Chile. The payment of the bond is of the principal interest of the investor will be made in Chilean peso via the local clearing system. And so we made public our intent to offer the bonds to domestic and international investor on Thursday, January 12th, a week ahead of the trade. So this is very important to highlight this, because for the first transaction, it was a very important effort in order to explain the mechanism, to explain this not only for the foreign investor but also for the local player, because the traditional system that we used in local markets was the Dutch auction, and we used the system of the Central Bank of Chile, SOMA. So for there, it was also a new transaction, a new mechanism, a new process. So we realized different conference call also with the local player, but also with the foreign investor in order to explain all the mechanisms, all the details of the transaction. You can see to the right different results of the transaction, so the yield, the price, etc. But I would like to speak about the allocation. You can see to the bottom right the allocation by investors who obtain an important participation of a foreign investor, about 20%. The allocation was to the foreign investor, and the demand was a little bit lower than, or it was about 16%. The other transaction that we realized over time, we have some similar share of participation. The last one was a little bit more, for about 25% of participation of local players. But in general, for us, it was a very successful transaction or experience in order to increase the foreign investor participation. I will speak after related the pros and cons regarding these topics. So regarding the LM operation in over time, for us it was also an important decision when decide to realize a concentration in key trading, also to have a very clear strategy regarding of the bond that will mature over time. So the way that we are manage this is that when the bond will mature in T-3, we will begin effectively a liability management in order to repurchase the bonds and to minimize the size of amortization. You can see that the maturity profile of at the end of this year is, as you can see in this graph to the right, is very important in terms of the key trading. You can see that we create additional benchmark. We create in 2023. We create also a new benchmark in 2030 in order to have effectively a size of benchmark between 4 to 5 billion in nominal curve, and also in order that when the bond will mature, we are trying to repurchase the bond before the maturity. As a result, we increase the participation in the GBI emerging markets index from the 0.1% that we had at the end of 2016 to the 3.3% that we have currently. And as I mentioned, the participation of the foreign investor increased from 3.4% at the end of 2016 to the current level of 16%, roughly. If you only consider the nominal bonds, this participation of the foreign investor is higher, it is around 35% of the foreign participation in the nominal bonds. If you look, all these bonds here are included in the GBI Emerging Market Bond Index. Okay, so not only the bond that we perform through the book building process with Euroclear bonds, but also all the bonds, all the outstanding bonds. This is very important also because this is a proof that effectively for us is very important the liquidity, and also the markets, especially the foreign investor, understand that all the nominal core of Chile is try to be more liquid and also is available in Euroclear system. The only bond that currently is not included in the index is the longer, the 2050, and we are in the process to include this bond. This is not an issue regarding the size of the bond, because the bond is, the outstanding amount is about 1.5 billion. It's more a problem of liquidity that we are trying to increase the liquidity in order to include this bond in the index. So finally, for us, the diagnostics is very good. We increase the diversification of our investor. We perform different meetings with investor over time. The question was effectively what we are doing regarding to increase the liquidity, and the message was we are in the process to implement different measures to increase the liquidity, but at least what was the first message is that we will continue to realize this kind of transaction, because we know that for the foreign investor this is more easy to access to the local market. We know that this is one of the cons, that the FX market constraint is very important for the foreign investors. As I mentioned, you also they prefer the book building process versus the Dutch auction. The only cons that we would like to highlight is that the price extension is not necessarily the optimal, because in general the international investor are price takers. So and also in general they would like to have some new issue concession. And in other side you have the local players that we have in Chile. Is the most important is the pension fund managers, because they know that the foreign investor also will require some new issue premium. They also require some new issue premium concession. So we increase the competition. We try to give some new issue concession, but at minimum level. In general, we give about 5 to 10 basis points of new concession. Of course, for us, the goal is to obtain a new issue concession near zero. Of course, for the government is better. But over time, we are seeing that more competition, because effectively, I would like to mention also that the foreign investor participation in the last 2 months have a very good behavior, because in Chile, you know, for the recent event that we are experiencing in Chile, we have some turbulence, especially in the local fixed income markets. We experience some outflow from the local players, basically changing the portfolio from the traditional fixed income markets to global equity. And in the other side, we have seen that the foreign investor players maintain the position, inclusive they increase the position in the local fixed income market. So for us, it was the proof that effectively to increase the foreign investor participation over time is very virtuous situation. They give some valve in case of some turbulence in the local market. And so this is one of the reasons that we would like to increase it, to continue the different measures to increase the participation. We include here in the slide that we would like to develop in the Chilean fixed income market a market maker system we don't have for the moment. We also analyze the possibility that the pension funds manager will access directly to the foreign investor through the OTC market. Right now in Chile, they allow only to trade through a stock market, Chilean stock market. Because this is a very important restriction, especially because the standard in the world is the OTC market. Okay, thank you very much for your time and your attention, and happy to hear different comment or question that you can have.
Thank you, Patricio. I think this is a very interesting. I can see some similarities, especially with the participation of the non-residents, both in the case of Chile, very large, over 70%, and I think even larger, or very similar in the case of Panama. But also some differences, which I think we didn't hear much about the case of liquidity, but I guess that was the main driver of the operation in the case of Chile. It was not. It was a different consideration in the case of Panama. Let me ask a clarification to Ana and Etzel in the case of Panama. I was wondering what, because Panama had the funding needs of Panama are relatively small. So this sort of operation is large, and it's going to take a space out of the auctions. So my question is twofold. One is, what was the reaction of the Panamanian banks, especially those that are participating in the auctions? And two, what would be, if any, the follow-up on this 2026 bond? Is this it, or are you planning to reopen through auctions? Over to you, Ana.
So I think in general we had a good reaction because we have some local constraints in terms of the pricing mechanism. And usually when we do our local auctions, the Social Security takes away a large part of the offering. So when we did this, the other market participants were able to get larger amounts than usually during our normal auctions. So in that sense, the feedback we received was very positive. That's something that we need to work out in terms of our normal auctions, another thing aside with the Social Security. But in general, we received very positive feedback. In terms of the plan for the 2026, we leave open the possibility of reopening the instrument in the future. I mean, it would depend on our financing strategy. I think for now we want to take advantage of the momentum we have received and maybe extend the curve first a little bit more, and then kind of use both instruments that we have if we do it to do subsequent reopenings.
Thank you very much, Ana. One quick observation, and I think we can hear this from Patricio, is like this issue for Panama at the center is going to be probably, now that you have discovered that these domestic syndications are working pretty well, and that you do have issues with the auctions because of the large size of the Social Security fund and the problem that poses with the price discovery. You may think of a different combination of syndications and auction. But let me pose that question to Patricio, and it's how do you see this? How do you guys go about this combination of syndication and auctions? And I think if I was speaking to Leandro, and we were kind of surprised to see that the first operation was for a relatively short-term bond, which is in 2017, I think it was a 4-year or a 5-year security, which is unusually short for the domestic syndications that countries normally do. But in general, I think, how do you see this mechanism of syndications versus your auctions? Because you also mentioned that even other bonds that have been issued through auctions are part of the index. So that issue is not the main driver. Over to you, Patricio.
Exactly. So effectively, the issue regarding auction versus book building process, it was, at least in Chile, a debate that we had, especially because why we have to implement this book building process, we have to hire, for example, underwriters versus to try to that the foreign investor will participate to the auction that we realize to the central bank. The response that we have is that for the foreign investor, is more traditional to participate, at least for a country like Chile, in the book building process, because the price discovery is more easy. Is more, they can put the order and to book and also have some discussion with the underwriters regarding the level, etc., versus the auction that sometimes, especially that auction, they don't know what will be the final result of the rate of the price versus the book building process. In the case of the issuer, also we have more space to give our preference to the investors versus when we are realizing an auctions. So in some time we have some discussion, inclusive with the banks, in order to change and because the auction versus book building is only to change the system of software. So we can easily also perform an auction with the international investor and also with the local players. It's not a question of the software, it's more a question of the standard in general with the foreign investor. The local player, for example, prefer the auctions in general, but they also, very strange, but they also will like to increase the liquidity. So this is one of the reasons that they are very aware and they agree with the decision of the government to effectively realize this book building process with the foreign investor simultaneously to the local player in order to increase the competition and to increase also over time the liquidity. So this is I think finally the main reason that we continue to do this kind of transactions.
Thank you so much, Patricio. Let me raise before opening the floor for Q&A and before turning to Leandro. Let me ask Javier Hernandez.
Sure.
That if it is possible to clarify a little bit, what do we mean when people talk about local bonds? Because this is something that people mean different things when they talk about the local bonds. So there could be the issuance, there could be the offering, there could be the settlement, the trading platform, so on. So Javier, could you kind of take us through these different parts of the funding and how do we look at the alternatives? And this particular operation is just one alternative. So over to you, Javier.
Sure. Hi, how are you? And can you hear me? Hello?
We hear you fine. Thank you.
Yes, very
Okay.
well.
How are you? Thank you for organizing. Well, that is a very interesting question because the local bond has like different meanings across different market segments. In the international market, what people normally consider as a local bond is actually a local law bond. That's a local jurisdiction bond. But there's also local currency bond, right? Which could be also a New York law bond, which is local currency, and so that's the nuance between the two. There's also the international market for local law bonds, right? Which we're talking about, which is basically taking a local jurisdiction security and issuing it in the 144A market, which only means that you are issuing under a SEC rule, which allows you to sell to certain types of U.S. investors. That requires, as you all know, certain documentation and 10b5 level disclosure. But it also could be that you take a local jurisdiction bond and issue it internationally, but without the 144A component, right? You can also do it via the Reg S market only, which would require substantially less paperwork. So there's a lot of nuances here. I think that basically what people mean by a local bond is actually the local jurisdiction security.
Thanks, Javier. One more clarification. I think in the case of both, in the case of Chile and in the case of Panama, they use both 144A, the documentation of 144A, and Reg S.
Yes.
This is exactly why. This is because the international banks need this documentation to market the paper.
Yes, that's correct. If you want to market the paper in the United States, you need to have 144A documentation. But if you would only, for example, do a roadshow in Europe and issue only in the Reg S market, you could do it with substantially less international disclosure. There is actually one precedent of this. There was a Mexican corporate bond, which was issued Reg S only. Obviously, the size of the market is much smaller, and most of the demand came from local pension funds. But that is a possibility. So there's a lot of different nuances in this.
Leandro, I turn over to you. I know that you had a bunch of points that you wanted to raise, so please go ahead.
Thank you, Antonio. Thank you also. Can you hear me, guys?
Yes, we can.
Sure.
Okay, thank you. So thank you also for the presentation, very interesting. I'd just like to concentrate a little bit on the liquidity, because actually both countries mentioned that the main objective of the transaction is to increase liquidity in the domestic market and also take advantage of more participation of foreign investors to extend the maturity. So one point that is clear for me is that the result in terms of increase the participation of foreign investors in the primary market, it's clear, because then you can see in the distribution that 75% was distributed for foreign investors. But I was wondering in terms of the impact of the liquidity in the secondary market, because for example, Panama showed that in terms of the I don't know if the number is related to turnover, but that this PANOTA 2026 has like a higher turnover compared to other Euroclear bonds. But I suppose that this is a kind of turnover between foreign investors that might be trading within the Euroclear environment. So I was wondering if Chile and Panama, if they have data, because Chile mentioned that in the pros and cons, you mentioned, Patricio mentioned the liquidity issue, in the sense that there are some signals of higher liquidity. So I was curious to learn about what are these signals, and if you have any data on increasing turnover, and if there is any data also in the transactions between local and investors, because I think one of the main concerns is that you can indeed widen your investor base, but maybe the trades are not fluid between the foreign and the local investors, as it was pointed out as one of the possible cons by Chile. So I was wondering, like, if you have this concern and if you have data on transactions between local and foreign investors. So maybe a question for Panama and Chile. And if I may just make two more comments. One is that I would see it as like two different things. One is the use of syndication, and the other one is the Euroclear. I mean, although both of them are focused on facilitate the participation of foreign investors, they do not necessarily need to be employed or to come together. I mean, it's possible to use the syndication for local bonds, and even if you don't have Euroclear or if you're not accessing foreign investors, but you're trying to have a higher, let's say, a more effective sales force, in the sense that it expand your investor base, and also it might have some good spillovers for the secondary market. But the Euroclear is a different thing. Although you also want to facilitate the entrance of foreign investors, it not necessarily will increase the liquidity in the domestic market, because you may have some kind of fragmentation between the trades in the domestic market and in the trades in the within the Euroclear system. So, I mean, just to summarize, I would like to hear more on how you are monitoring the improvement in the liquidity, as there is a risk for the liquidity be kind of fragmented.
Let's hear from Panama first. Ana, do you have any comment to make?
I think this is something that we have discussed, and when we look at the treasury note, I think 60% is in Euroclear, which means secondary market movement is mostly among the international investors. So I think I can agree with Leandro that this is something that we must monitor very closely, although there has been some significant movement at a local level that we have been able to see what we mentioned, the spread reduction. And initially, when we first launched the transaction, a few days after, one of the concerns that investors had was secondary market liquidity. And there were some trades after that. I think Javier may be able to give some input on that, but there were some trades that actually helped us give more confidence in the instrument, so to speak. But yeah, I think the challenge for us is bringing more instruments and doing more frequent auctions, whether they're Euroclearable or local auctions, or just finding the right combination between the two, so we can continue developing our market.
Yes, and if I may quickly add, we saw a lot of secondary movement, especially in the local side. We did a lot of trading in our New York desk, and there was a lot of local accounts that bought in the secondary market, and a lot of international accounts that were able to sell the bond in the weeks after the bond was issued. So that gave a lot of confidence to the initial buyers that that an actual secondary market existed, and that they could actually buy very easily through our desk to local accounts. So that was a very, very important part that gave a lot of confidence to the accounts.
Patricio, do you want to comment?
Yes. So regarding some data regarding the increase of liquidity, unfortunately we don't have too much information, because For example, the increase of foreign investor participation was very impressive. So remember that it was 4 years ago, and right now it's 16, and only nominal bonds is from this 3% to 35%, but we don't have access to the transaction in the external markets. So we only have access to the transaction that was performed in the local stock exchange markets. We saw effectively an increase in the size of the different tickets of the transactions. But if you compare this with the outstanding amount of the bonds, is still very low or remain stable, because remember that we increased also the size of the benchmark. So remember that we had, for example, one bonds was 1.5 billion, and because we performed a different LM operation, the size of these bonds increased and reached a level of 5 billion. So effectively, the transaction increase in the secondary market, in the stock exchange market. That's the information that we have access. But in terms of turnover, it decreased because the size of the benchmark also increased. This is something that we are trying to have more information with the central bank. We don't have the transaction every day, or because it's very difficult to obtain this. I don't know if other countries have access to this one, or if there is some regulator in the private sector that can have this information, but we don't have this information, especially the transaction in within or between the foreign investors with our local bonds. And regarding the term of Euroclear, I think that it, as Javier mentioned, and also Leandro, effectively Euroclear is very useful for the settlement. But also, if we have to make more effort in order to try to have a better transaction between the people that is participant of Euroclear and the people that are not participant of Euroclear, basically the local payers, because they are the most important debt holder, at least in Chile, of our local bonds. So this is one of the reasons that we indicate in the presentation, that to make available the OTC market for the pension fund manager, and they will able to participate directly to the foreign investor, it will be a very important step in order to increase the transmission and the competition between these two markets. That for in our diagnostic is the key element to increase the liquidity, and also because the local player we would like to access to the foreign investor, and together they would like to access to the local player. So this is for us a key element, additional to that the market maker system could help also in some way to increase the liquidity, but we've seen that the first one could be the most important.
I would also like to add something there very quickly, just as a quick example. In the M bono market, which is a Mexican corporate market, as you know, Mexico did this. Mexico listed its bonds in Euroclear in the 90s, so it's quite a mature market. In this market, most of the offshore trading occurs in the market access platform, which settles through Euroclear. And for local to local transactions, trading is mostly done over the phone or through Bloomberg, and the clearing takes part in the local CSD in Indeval. So cross-border traffic is managed using both systems, and clearing occurs through omnibus accounts, right? So in this market, it doesn't appear to be any fragmentation because local participants have access to this international platform, and that way they are able to cross trades between both pools of liquidity, the local participants and the offshore participants. And the international participants also know of the existence of the local market, and they know that they are able to call a trader in New York, which can actually get their bonds sold to a Mexican account. So I think that's very important to consider going forward in some other countries.
But one question regarding to that, Javier. So this is what Patricio made reference to. If if Euroclear doesn't provide information, then how does the Mexicans get info on the trading in the secondary market?
Well, I mean, the trade in the case of Mexico, the secondary market is there's a huge portion of it is obviously takes part in Mexico and it's over the phone, etc. But the dealers are the ones who have access to both pools, right? So, for example, a trader in Banamex has his market access platform, which gives him access to international participants, and he's also in constant touch with local participants. So he's able to cross trades. So if a local participant wants to buy a bond and international wants to sell, he is able to cross that transaction between two pools of liquidity using both platforms. And the settlement ultimately occurs through omnibus accounts, right? So the bonds are transferred from Indeval to Euroclear, because in the case of Mexico, bonds can reside in the CSDs, right?
Leandro, any reaction?
Yeah, actually, I'd just like to pick back on this comment of the PDs. That would be my follow-up question. Is that Patricio mentioned about in the next steps they would be focused on developing a market maker, I understand, as a primary dealership system. So I was just wondering here, it's how this adoption of syndication, how it may affect the primary dealership system. So maybe we can hear from Panama, where they have this PD system, and also Javier, if he can comment on the Mexican case, in the sense that if you are using a syndication process, the PDs, it's not really up to the PDs to comply with some primary market and, let's say, secondary market obligations if they don't have necessarily the needed access to these bonds on the primary market, because the distribution will be much more up to the issuer. So I was wondering if that when you are basically using syndication to distribute the bonds, what would be the impact on the primary dealership system in terms of their obligations for subscription, trading, and especially for quoting in the secondary market?
Anna, anything? I know there are the primary dealer system was under revision. So the question is whether this particular operation is part of the system or not, and how does it play into the PD system?
So we are going to implement some changes in our market makers program and in the regulation. When we issued this instrument, it was done outside of the program. So what we are planning to do with the changes is that we are going to be including it. And that would include some changes as well in terms of the pricing mechanism to include book building process within the market maker program. For now, that's the plan for the next year.
Thanks, Ana. Javier, any insight on how does this play for the Mexicans?
Yes. Well, in the case of Bono, I think Mexico has never actually done a 144 underwriting of its local securities. It has all came through the secondary market and through internationals participated directly in auctions. So I think that wouldn't apply to this case in particular.
Okay. I don't know if you have any you would like to. No, let's move. I got the message that we need to move to the Q&A because we're actually very close to finish. So I let Rodrigo handle this part.
Okay, thanks, Antonio. I know that we are a little bit behind, but I'm sure we can take a couple of questions. So the first question that we got is for Panama. And the question is the following. It says that it looked like, in your presentation, that new investors were only attracted to the local market due to the spread differentials with the Eurobond curve. So the question is how you expect to further attract non-residents if the spread keeps tightening?
Well, I would argue that it wasn't only the spread over the global curve which attracted investors. When we were doing the roadshow, one of the things that they asked us constantly is, why are you doing this if it's so easy for you to do global bonds? We like your global bonds. So we were saying, it's our same rating, you're dealing with the same issuer. We know you need a pickup from the global curve, but I think as investors get used to this instrument, we're going to be able to offer lower spreads. And what I'm trying to say is I don't think the primary reason for buying it was the pickup. It was just trying to see what type of instrument was it, what was the reasoning behind it, and in the end, it's still Panama's credit. So for them, it's just an alternative option that they may see more recurrent.
Got it. Thanks a lot, Ana. We have a question for Patricio, and the question is the following, Patricio. When you showed the first Euroclearable bond, we saw that 84% of the demand came from local investors. The question is why you didn't see more demand for non-residents, or would you expect that to be different in future Euroclearable issuances?
Yes, so regarding the percentage is because I think the first response is because the local players are very big. So for example, to give you some example, when we realized the offer, it was for about 1.5 billion, equivalent in peso, and you will have some demand from local players that have 500 million, the other one 400 million. So the demand of the local players is very, very important. The asset under management that they have versus the issuance of, for example, 1.5 billion is very, very important. So the demand for local players is important. Maybe also it depends on the market condition, depend of the volatility or the level of the exchange rate, the expectation of the foreign investor regarding the rate, and because remember that for the foreign investor, they have to consider the rate, but also the movement in the exchange rate and the market conditions. So to give you some idea, in last transaction of this year, the participation was higher because the market was better for Chile. The first time was about 18% only of foreign investor. We know that, for example, in other countries like Peru or maybe in the case of Panama, the demand was most important. It could be because our level of rate is not so high, so maybe the demand is not so important. It could be, but in general, we are very quiet with the level of foreign investor. We are not looking for targets of participation. We like to increase the competition, the price tension, and finally, as I repeat many times, over time to increase the liquidity and the competition.
Thank you, Patricio. One more question for Panama, Ana and Edsel. The question is the following. It says, I congratulate the DMO from Panama for being able to successfully issue their international bond. It is, of course, referring to the Euroclear bond. But I would like to ask if you could share some further information on the costs incurred to issue such a bond and the preparatory work that the DMO would need to undertake such transaction.
So sorry, there was some echo. You said the cost incurred, and what was the second thing?
And in general, the preparatory work that that office would need to undertake this transaction.
I think mainly it was the legal costs were a little bit higher, and I think that went from both sides, as for the banks and for us. Secondly, the stock exchange costs were higher. Usually we do much smaller deals, so therefore the stock exchange commissions are lower. But that's something from our side that we will review in the end with the stock exchange. And in the end, I think in general, it was what presented a lot of work for us was the negotiation between the bank's lawyers and our lawyers, and just trying to define the best offering documents so that international investors could feel confident about what we were doing.
Thanks, Ana. Maybe the last question that we're going to take, and it's actually a follow-up to this question, and I would ask Javier, because Javier mentioned the different structures, the Reg S, 144A. So related to this question to Ana, Javier, on the costs, what would be like the trade-offs for a country that is looking to start issuing an Euroclearable bond? What would be your reflections upon should they go for a full SEC registration or 144A, or maybe start with a simpler structures and less costly, such as Reg S? Anything that you could quickly share with us?
Of course. Well, first of all, the SEC registered party is a very interesting topic because we have not seen any precedent of an SEC registered local law security being offered. We've had a brief discussion with counsel on this possibility, but this is certainly an area of opportunity which has to be explored further with lawyers in detail, right? So we haven't seen that as of now. For an initial placement of a local security, especially if it's the first one, and especially if you want to allocate as most of it possible in the international market, the biggest market for sure is the 144A, right? So if you want to increase as much as possible the participation of the U.S. investors, which are the biggest ones, you need to do full 144A level disclosure, and that is essentially that's much more costly than doing a Reg S offering, because a Reg S offering does not require certain legal opinions that the 144A underwriting does, right? So you could do, I mean, to answer your question, I think that it depends on what you want. For example, in the case of this Mexican company that I was talking to you about, they issued a SEBUR, which is a local law corporate bond, and they wanted to place it internationally, but they do not want to go over the hassle of doing the 144A disclosure, and so they did a Reg S only deal, which resulted in very low foreign participation. It was mostly, I think it was a couple of Asian investors and some European. They were not able to market the transaction in the United States, but that is an option for sure if that is, I mean, it depends on the issuer, but in a broader sense, I think for sovereigns, especially if they're trying to start building their international local law curve, they should for sure use the 144A market.
Thanks a lot, Javier. With that, let me give the floor to Antonio back for the closing.
Okay. No, I'm not going to summarize the discussions. I think I'm really happy that we had the panelists the opportunity to discuss and talk about some of the issues that are that are super relevant for the discussion of the local bonds. We were at the beginning very worried about, especially Amira, about whether this was going to work with Patricio in Chile, Ana and Etzel in Panama, Leandro in Vietnam, Javier in New York, and I'm in Rabat. So it did work. So thanks to everyone. Thanks Patricio. Thanks Ana. Thanks Etzel, Leandro, Javier. Really, that was a great participation, and we look forward to continue this. I think we'll do some work with Leandro, because I think the subject matter is rich enough to merit a continuation. Thanks to all, and have a great day.
Thank you so much for organizing.
Thank you, everyone.
Thanks, Amira. Bye.
Thank you.